Hey guys, welcome back to another episode, and today we're talking about a new penny stock. And the stock, why it's interesting to me is because I think it may be or possibly resembles the early makings of WELL Health Technologies. In 2019, WELL Health was trading at about 43 cents per share, and in 2018 or 2017, it is trading at 14 cents per share. But you can see with the pandemic and everything that happened in healthcare, WELL Health stock went on a tremendous run, rising about 366% within a couple years. Now, the stock we're talking about today is called Leveljump Healthcare. And the reason why I'm talking about the stock is, well, firstly, the company reached out to me looking to see if I was interested in doing a profile on them. So I agreed to do so. So this video is sponsored by Leveljump Healthcare. We'll be going over the business of Leveljump Healthcare and talk about what they actually do, how they bring shareholder value, as well as look at their stock chart and a few other pieces of information. Again, this video is not to solicit your investment into Leveljump Healthcare, but more for their publicity. If you are planning to invest in this company, please do your own risk management because this company is considered a penny stock and it has about a market cap of $10 million. So yes, it's possible this company could be a high risk, high reward play, but it could also go the other way. With that being said, let's jump right into our research today. So on the homepage of Leveljump Healthcare, the mission of this company is they're focused on revenue, growth, and new opportunities within healthcare, providing much needed services in the communities we serve. They're trying to expand their operations and return shareholder value. So this statement here shows that they have shareholders in mind because they're trying to grow their financial aspects of the company like revenue as well as growth, and they're trying to return value to shareholders. This is a fair statement to make, but it doesn't exactly give us that much insight into the company and what their mission is in healthcare. So let's dig down a little bit further. So the company is focused on one of the core pillars of healthcare, which is diagnostic imaging. Through the subsidiary CTS, they have been providing teleradiology services for hospital emergency rooms for over 16 years. So CTS is not a new company, and just to let you guys know, this is not Converge Technology Solutions, it's a different company. They're planning to continue to expand their existing services while also exploring new innovations and technologies within their industry to better serve patients and doctors. And if it still doesn't really make sense, let me try to break it down for you. So in a hospital setting, they have people who take MRI images, CAT scans, CT scans, and x-rays. So once the image has been snapped and processed, they need a radiologist to be able to look at the image and make some sort of diagnosis. However, in rural hospitals, more often than not, they don't have a radiologist 24/7. So if you fracture your bone in the middle of the night because you were out partying too hard, then you might have to wait till the next day or the day after that to get your medical image to be looked at by a professional. However, what CTS does is basically connect radiologists remotely to hospitals who need the service 24/7. That way, if you're up in Northern Ontario and you don't have a radiologist in the middle of the night, they can send that image to a remote radiologist in order to have that radiologist give a diagnosis of what's going on in the image. Now let's go over to CTS's website and just get a better idea of what they actually do. This company so far has built up long-lasting partnerships with clients, and these clients are hospitals. In hospitals, more often than not, they don't usually switch the services that they use unless they really find a good reason to over time. So the fact that they've been with hospitals, they usually sign long-term contracts. And the value that they provide to the hospitals is to ensure their emergency rooms and the most vulnerable of patients are cared for with regards to diagnostic testing, no matter what time of day. So they provide on-call radiologist services to these hospitals. As a radiologist, why would you work for CTS? Well, think of it like this. If you're a radiologist and you don't really have a family or you just got some extra time on your hands and you want to make a little bit of extra money, then you can sign up to be on CTS's on-call radiologist and make a little bit of a side income. This video here just kind of explains to radiologists what you do as a radiologist under CTS and the benefits that you get. Now let's quickly go through the slide deck of Leveljump. So this is an important slide right here. Why diagnostic imaging? So the diagnostic imaging services are a core pillar of healthcare treatments that are combined with an aging and growing population. So we know that baby boomers right now are moving into the senior age. This population will continue to grow in market size. And as that population continues to grow, there's bound to be more people who have broken bones due to falls and stuff like that, that require radiology or just regular cancer treatments and stuff like that. So radiology is a big and growing opportunity. The revenue streams for them include government payments leading to consistent flow of funds and reduced accounts receivable. This slide outlines the areas of growth for Leveljump. So through their subsidiary CTS, they're expanding their offerings to more emergency rooms all over Canada. They're also looking to create day services for private clinics. In terms of the acquisition front, right now Leveljump only owns CTS as a fully owned subsidiary. They did make a small investment into another company, but beyond that, they're actually looking to do more acquisitions. And this is why I say they're similar to WELL Health, but in the early days. So with only one subsidiary under their belt, I'm sure in the future they're going to be announcing new acquisitions. And it'll be important later on to look at their financial statements to see if they're able to fund those acquisitions. They're focused on technology, so they're looking at seeking distribution rights for hardware that disrupts the imaging space, as well as software, AI, and other opportunities. And lastly, they're looking to make investments within other healthcare companies, as well as products or services that offer sizable returns. So they might end up owning some clinics that do medical imaging, and that's similar to WELL Health's approach, where WELL Health decided to buy up clinics that have doctors and patient care inside those clinics. This slide outlines the potential that Leveljump has. So the medical diagnostic imaging sector is worth about $40 billion worldwide, and it's growing annually. The teleradiology can be performed from anywhere where there's high-speed internet. So as a teleradiologist, you can move to the other side of the world for a year and just do this gig if you want to. Just get a break from the hospital scene. Canadian board certified radiologists are in demand, so the fact that they're in demand means that there aren't enough out there. And when there's not enough, then hospitals will be looking for some way to fill that demand. And they could be looking to CTS to fill that demand. It seems like the fact that they're highlighting that there's a world opportunity of $40 billion means that they might be trying to expand elsewhere in the world beyond Canada in the near future. So here are some goals of the company. First is to target organic growth within their current business, add new customer contracts, so more hospitals, as well as perform some acquisitions in order to broaden their portfolio in healthcare companies. The acquisitions that they're looking for will have both positive cash flow, which is a very good sign, as well as a net income. This way, the company won't be bleeding money in order to fund their current companies. Instead, they'll be having positive cash flow into the parent company, which will then go out there and acquire more companies. They're planning to expand to other provinces and jurisdictions. And just for your information, CTS, I believe, is only certified in Ontario right now because they were looking for Ontario radiologists. However, they're looking to expand into other provinces and jurisdictions, which will give them a national presence. Another point here is that they're looking to buy diagnostic imaging centers that have a physical presence, and that's to increase their brand awareness across Canada. Now, looking at the corporate structure, this is a very important thing to look at. This is the number of shares as well as what's management's ownership of the company. It's good to see that they have almost a 50% ownership, and with the statement that we read initially in this video that Leveljump is looking to expand their operations and return shareholder value, the fact that management owns almost half of this company, of course they're going to be looking to return shareholder value because they hold a stake in this company. If we look at the total outstanding shares after warrants, options, and broker warrants, we're looking at a common shares fully diluted of 76 million shares. However, look at the warrants, options, and broker warrants. At what price are they exercised at? 35 cents, 44 cents, and 45 cents. So these people who own the warrants or options or broker warrants, they're going to have to pay 35 cents per share in order to exercise their warrants, basically trade their warrants for shares. And if we look at the shares of Leveljump right now, Leveljump is trading at about 20 cents per share. So getting in right now before these warrants are exercised means that you're buying these shares at a price lower than management who have these options to them, as well as possibly previous shareholders who bought shares and received warrants. Now, looking at their team, the most important person I always look at is the CEO. The CEO is Mitch Geisler. And a bit of a biography on him, he's been the CEO of CTS since 2010, so he's been operating that business for about 11 years now. And he's overseen its operations and growth from $850,000 in gross revenues to approximately $5.4 million in gross revenues. He's a seasoned entrepreneur in multiple sectors, including healthcare, mining, and hospitality. He's built companies from the ground up and has extensive experience in operations management and oversight. He also has experience in implementing policies and procedures, directing marketing and growth strategies, and providing initiatives for long-term corporate success. Going over to his LinkedIn, we can see his past history and his career. So he's been the CEO of Leveljump since December 2020, and that's when the company Leveljump merged with a previous company as well as CTS to form the current entity that they are today. He's also the CEO of CTS, and he's held that position since 2009. He's got another company here. He's a CEO of Medical Imaging Corp, and this is basically an investment holding company which also has a large stake in Leveljump, which we'll see later on. Before that, he was a chief operating officer of Pacific Gold Corp for about 11 years. Interesting how he made a switch from materials all the way to healthcare. If you go over to the filings of Leveljump, the third quarter is when they made the merger with the previous company, which was just a shell company. So if we look at their first financial statements over on this page here, we can see that they started with total assets of about $850,000 and total liabilities that were greater than the total assets at $1.4 million. Looking at the revenues, they were making about $1.5 million every quarter in revenues from teleradiology, as well as $19,000 from another revenue source. Their cost of sales were about $1.2 million, and the gross profit was sitting at $286,000. Total expenses were about $244,000, meaning a net income of $42,000. Now, if we jump over to the latest quarter, we can look at those financial statements. The current assets of Leveljump as of June 30th are $2.5 million. They have current liabilities of 1.1. So this is very good to see that they increase their current assets and drop their current liabilities, and that ratio is now looking like a 2. If we scroll down to the revenues have not increased by that much, just a little bit, to about $1.6 million. And as well as the gross profit has increased by a bit as well, maybe about $50,000 to $331,000. However, they're now running a net loss of about $500,000. So things have changed there, but it's probably due to some more administrative fees, marketing fees, professional fees, which you can see right over here. So it looks like the company is trying to accelerate their growth through marketing and advertising, as well as paying for more professional services, hopefully providing value to shareholders. But the outcome remains to be seen right now. Looking at the insiders of this company, not much action is going on. No one's really buying or no one's really selling. There's some options being exercised. There's some stock splits that are happening. There is an acquisition by the CEO. He bought about 29,000 shares at a price point of 34 cents. So he was willing to acquire shares on the public market for 34 cents per share. Looking at today's price, they're sitting at 20 cents, so he paid about 2 times more than the current price of the shares. Scrolling near the end, I didn't see any selling of shares, which is a good sign to see, and there was another purchase here for 29,500 shares at a price point of 34 cents USD per share. And this is done by the CFO, Robert. Now, looking at the stock chart, taking it for face value, it honestly doesn't look that great. When the company became Leveljump and started trading under the ticker symbol JUMP, they started out at a price point of about 40 cents per share. Then they skyrocketed up in the winter of 2021, and that was basically when Well Health also peaked. So all the telemedicine stocks were super hot at this point, and Leveljump also saw its stock price jump all the way to all-time highs of around 63 cents per share. And then ever since then, it's been a bit of a downhill battle. However, we did see recently a jump in the stock. It traded as low as about 13 or 12 cents per share, and today it's trading about 20 cents per share. It's under its 50-day and 100-day moving average, so if you're looking to buy into this company, maybe making a small bet, it's not a bad idea in holding these shares for 5 years. I personally am still on the fence if I'm going to be buying shares. I may or may not, but if you follow my journey, you'll find out if I do buy shares of Leveljump Healthcare. So remember to subscribe down below. As well, if you're new to investing and want to start investing today, consider signing up for Wealthsimple Trade. You'll get $50 when you sign up on the spot today. As well, if you sign up for Wealthsimple Cash using my link down below or my code, you can get an additional $10 for free. I'll also leave a link to this interview done by the CEO because he gives you a bit more perspective into the company, and it's always great to hear from leadership of a company. It's about 21 minutes long, and it was posted on January 18th, so definitely go check that out if you're considering this company as an investment. Let me know your thoughts down below on this company and if you're interested in buying the company. Also, I'll throw up a video right here. This is my latest TFSA portfolio and what's in that portfolio. You can check it out if you're interested. If you are, I'll see you there. If not, keep up the grind and have a great day.